In just a couple of days' time, or even right now, depending on when you're watching this video, cryptocurrency will be permitted to be purchased by UK investors inside investing accounts. This is because the FCA, who regulates investments in the UK, is lifting the ban on crypto exchange traded notes from the 8th of October. What this means is that for the first time ever, UK investors will be able to buy certain kinds of cryptocurrency investments inside their general investing accounts, stocks and shares ISAs, and even their pensions. So long as your Apple provider has access to them, you'll be able to add these in, and potentially this could have a big impact on the retail investing landscape. Now, before you all get too excited and go blowing all of your money on these things, here's everything we know and all of the important details that you need to get your head around. Okay, so firstly, let's nail down what UK investors can actually buy here, as it's not the same that's been allowed in the US for some time now. As you might already be aware, US investors have had access to crypto ETFs since 2001, when the first Bitcoin futures ETF was released. This was the first major step that allowed US investors the opportunity to gain access to cryptocurrency products on the stock market. A few years later, they were then given access to real-time spot ETFs, which track the price of Bitcoin and later Ethereum, and they've seen a huge rise in popularity with many retail and institutional investors. In fact, one of the Bitcoin ETFs in the US became the fastest ever one to reach $10 billion, doing it in 7 months. Compare that to some of the other extremely popular ETFs, and you'll see just how impressive this was. Now, for us here in the UK, during this entire period, the Financial Conduct Authority has had a ban in force from January 2021 for any crypto funds or derivatives. Basically, it meant that if you wanted to buy any cryptocurrency, you'd have to do it outside of the traditional investing system, and you certainly wouldn't be doing it on any regulated market like the London Stock Exchange. From the 8th of October this year, however, that ban is lifted and UK investors will finally be allowed to access cryptocurrency investments. But there are a few caveats worth knowing about. Firstly, this type of investment that we're going to get access to is a very specific type of asset that's called exchange traded note. Now, these shouldn't be confused with exchange traded funds or ETFs that a lot of you will already be really familiar with, especially if you watch a lot of my channel. An ETF is a type of investment that might track an index like the S&P 500 or the FTSE 100. And when you invest in it, your money usually ends up in a fund that will physically own those investments. For example, if you owned a share in a fund that tracked the S&P 500, then you'll indirectly own shares in companies like Nvidia, Microsoft, Apple, and many others. Now, exchange traded notes are quite literally just that. They're just notes or investments on paper. What this means is that if you were to buy an exchange traded note that tracks the price of Bitcoin, you never actually own any Bitcoin directly or even indirectly. The note is technically just an agreement between you and the issuer that says it will provide you with the returns of the price of Bitcoin. If you buy a note and the price of Bitcoin moves up 10%, then you should see your investment value increase by 10% minus any fees that are baked into the price of the note. However, the really key part is that there'll be no ownership in Bitcoin itself. The issuer of the note won't have any huge bank of millions of pounds worth of Bitcoin sitting around backing it all up. What this means in reality is that you do have to take on a little bit more risk than you might normally expect from a traditional style of investment. It's worth saying as well that there are also ETFs that don't physically own the shares in the companies that they let you invest in, but just park that to one side as we don't want to get too technical in this video about cryptocurrency. Think of it like this. If you buy, say, an ETF from Vanguard that tracks the S&P 500 and then Vanguard all of a sudden went bust, technically there is still a huge value left in the fund because the value of the fund is tied to all of the stocks that it owns. Vanguard going bust wouldn't mean that all of the shares in the fund also as well have no value. Imagine the fund is worth £100 billion because all of the shares that are inside of the fund, it would have shares from all the big ones like Nvidia, Microsoft, Apple, Amazon, and so on. Now, the fund manager, which would be Vanguard in this example, is separate from the fund itself. And that's a key difference here when we're talking about what an exchange traded note is. With a note, if the issuer were to go bust, let's just say that the issuer in this example was also Vanguard, this time you would lose everything, as there's basically nothing backing it up. Now, I've got no reason to believe that any major issuer will go bust, but it's just something important to realize that when you invest in a crypto product like these, there's no protections or guarantee from the Financial Services Compensation Scheme. In fact, this is also true with all ETFs anyway, but the point I wanted to make was that at least an ETF is usually backed up by the value of the shares themselves, which are inside a fund. Anyway, just be aware that if you do invest in these, you take on both the risk of the asset itself and the risk of the issuer. As long as you understand this, then you should be okay to work out whether this is for you or not, but please do figure that out first. Anyway, why is this such a big deal for us UK investors? We've been able to buy crypto from places like Coinbase and other exchanges for years. For full disclosure, I also do own some crypto, only Bitcoin at the moment, and I've held that for quite a few years. The biggest news here is that all of the crypto buying and selling of cryptocurrency has happened outside of the traditional investing infrastructure. Now, by that, I mean that there was no way to buy Bitcoin and Ethereum, for example, inside of a stocks and shares ISA or even a self-invested personal pension. From the 8th of October, however, this all changes, and it could have a big impact on potential returns in the future for investors. By being able to access an exchange-traded note that follows the price of Bitcoin and Ethereum from a market like the London Stock Exchange, you'll be able to add this to your stocks and shares ISA or even your pension. The biggest change here will be that any investments inside accounts like these are going to be free from any dividends taxes or capital gains taxes if they were to grow in the future. This is because any investments you hold in stocks and shares ISA or even a pension are not taxed while they hopefully grow. And in the example of a stocks and shares ISA, there's not even anything to worry about when you want to take money out and sell your investments. If you take this to the extreme, you could in theory use all of your £20,000 ISA allowance to invest in a Bitcoin ETN and have any gains completely tax-free. Now, obviously nothing is guaranteed when it comes to investing, and I'm sure that this investment would be very volatile along the way. However, that option would be available to you if you were that kind of individual. Bringing crypto investing into the mainstream using the infrastructure of the traditional investing world does make things a lot easier, and it should stop people falling into scams. The problem at the moment with crypto investing is that because of the lack of regulation and controls, there's nothing stopping anyone from creating their own crypto broker, setting up in the Cayman Islands, and then trying to scam UK investors out of all of their hard-earned money. Now, another key point worth mentioning here is that you'll only be able to access these crypto ETNs if you pass a fairly basic test, which the investing platform themselves will present you with before you have actually any access to these kinds of investments. It's just a multiple choice quiz of a few questions, and I had this appear on my screen when I was using Trading 212 the other day. I'm not sure if all of the platforms will use the same system or whether it's unique to them, but do be aware that you can't just dive in without at least showing them that you understand the risks. I think this makes a lot of sense for us. It's quite a big leap for UK investors who are now going to get access to a fairly risky and volatile type of investment. Now, secondly, and most importantly, you'll need to actually use an investing app or platform that will have access to these ETNs. Now, not every platform is going to give you these, and not every platform will offer you all the types of accounts that you might want to use as well. If you do want some good suggestions for investing accounts, and especially stocks and shares ISAs, I've done a comparison spreadsheet which you can get access to if you click the link in the description below. Just pop in your email address in. I've also done a video alongside this too, which you can easily find on my channel, where I go through in a bit more detail what different platforms actually offer, because it's really confusing out there. As with anything, when it comes to investing, you've still got a lot to learn before you even decide what you want to invest in. And using the right account is super important, especially for tax reasons, which I'll talk about later. Anyway, with all that said, do I think that this is a good thing for UK investors, or is this a step into a very risky style of investing that most people need to avoid? I think generally I'm a big fan of giving people more choice when it comes to investing, and I'm glad that we're now allowing people access to cryptocurrency through more traditional channels. People want to invest in the likes of Bitcoin, and I think doing it through the stock market will give people a lot more safety than potentially being scammed from some crypto marketplace based in some dodgy tax haven somewhere. I think ETNs are a good first step, but I would like to see those more traditional style ETFs that the US has implemented, where the fund itself will own the likes of Bitcoin physically rather than just trade on paper. my personal preference would be to have funds like that. So in the case of the issuer going bust or something happening, there is actually a real asset backing it up. I also do think it's a good thing you can get these inside an ISA or even a pension, as one of the best things about those kinds of accounts is the ability to save any taxes, especially the likes of capital gains taxes. I know there'll probably be a lot of you out there with some crypto on platforms like Coinbase or other big names, and you've got some unrealized gains that you might want to realize someday, and you may well decide to bite the bullet now, sell it there, and then buy it back inside an ISA so that any future gains are protected from the tax man. I'd be interested to read the comments after this video has gone live to see just how many of you would plan to sell your crypto and rebuy it back inside of an ISA or a pension. Drop a note down below. Now, we've obviously got no idea what will happen to the price of Bitcoin over the next few years, but in the past at least, it has been the single best performing asset that we've ever seen. If you're able to invest in this, take advantage of the price increases, and then save yourself any capital gains taxes, this could be a huge incentive for people to move their investing from unregulated exchanges back into the traditional investing world. So overall, I'm definitely a fan of more choice, like I said, but there will be part of the UK investing public that could take this too far and see this as some green light that crypto is somehow a safe investment, that it's guaranteed to go up now that it's been approved to be traded on the stock market. Please do be aware that just like any investment, it does carry that risk and the usual rules apply, and that you need to stick with these things for a long term, have a long-term mindset and stay calm, especially when things get tough, which they inevitably will. Also, please do pay attention to fees. Now, I've not seen these notes just yet, and I don't know which ones specifically are going to come out on day one. But do remember that like any other type of investment fund, there will be fees baked into the price already. Now, this is really important to consider, as over the long run, you can actually end up costing yourself a lot of money if you're not careful. So make sure you read through all of the documentation before making any investment. Like I said earlier, the same rules apply just like when you're making any kind of investment and putting your hard-earned money to work. I'm expecting these ETNs to have relatively high fees, as I suspect there'll be a huge demand and not a lot of people issuing notes from the beginning, but I'll keep an eye on things and I'm happy to do a follow-up video if needed. Anyway, as usual, I'll give you all the last word. Let me know what you're doing in the comment section below. I don't usually talk about crypto on this channel, but now that it's going to be mainstream and be inside ISAs and pensions, maybe we all need to keep ourselves educated. Is this a step too far, or do you welcome these new changes? I'll see you in the next video. Happy investing.